Good afternoon, everybody. I want to talk about Viking with VKIN. They're one that if you bought in early, you could have seen a gain with this company. Over the last year, they've went through some changes. Those link with CEI, which is at 0.83. When you look at CEI, they've definitely been on the move, and they're due for a breakout. But there's some things to look at with this company. When you look at CEI, they've came down and they've brought themselves back up to a solid point. And it's all about timing when you're buying into these companies. With CEI, with Camber, they're pleased to announce that the parties have entered into a definitive agreement and plan of merger dated February 15th, 2021 regarding the full combination of the two entities, which is Viking and Camber. So Viking, or the company, is pleased to announce the completion of another deal with its majority-owned shareholder, which is Camber. So when you look at Camber Energy and you look at the niece for them, pursuant to which Camber purchased $11 million worth of common stock of Viking, and that was July 30th then, 2021. It's worth noting at this point that Camber Energy already has a 62% stake in Viking Energy Group. The merger will have Camber Energy acquiring the remaining stake in Viking Energy Group. It will do this by issuing new shares of CEI stock in exchange for Viking stock. So Viking Wind Farm is a wind farm under construction, and that's the keynote. It's under construction, which is being developed by Viking Energy, a partnership between Shetland Island Council and SSE plc. Construction started in September 2020 and should be completed in 2024. So with this stock, I think it's a pretty solid long hold if you're getting into CEI, where through 2022, you're going to be seeing gains in the end of 2021 this year, get into 2022, with 2023 and 2024 starting to be some solid gaining years. In finance, a reverse stock split reverse split is a process by which shares of corporate stock are effectively merged to form a smaller number of proportionally more valuable shares. A reverse stock split is also called a stock merge. I brought this up because if you're not aware of reverse stock splits and stock mergers, it's a good time to do your homework with these companies before the September 28th deadline, and make sure that you're well aware of all the possibilities of outcomes that can come with these companies. It can be negative or it can be positive. On a positive though, often companies that use reverse stock splits are in distress. But if a company times the reverse stock split along the significant changes that improve operations, projected earnings, and other information important to investors, the higher price may stick and could rise further. With ECI, we're starting to see this where it might, checking into this, you might want to research further if you're involved in either one of these companies. And the Element Fleet Management, CEI will operate as wholly owned subsidiary of Element Fleet Management Corp., independently from the fleet management business and under the CEI name. So Camber Energy Inc. has a lot of things going for them. It was formerly known as Lucas Energy and changed name of Camber Energy in January 2017. Camber Energy Incorporated was incorporated in 2003 and is based in Houston, Texas. It's definitely one, if you're involved in it, there's a lot going on in Texas. So seeing where they're at and what's going on. Camber Energy wins an IP license for patented carbon capture systems. So they definitely have many things in the market that they're hitting on different strategy points. So check it. You have to check, and you have to check and then recheck and stay on top of these stocks and see what these stocks are doing, where they're moving, and what's going on. You have to see what it is. What is it? What is the company about? What it is that the company is doing, what it is the company's aiming for, what they're after. Investing and trading, you have to do your due diligence. It's your education. It's key to your success on these stocks, to go through these Form 10Qs, to look at the reported earnings. When you look at CEI, I think they're a profit stock and they're a long-term stock possibility. And like I said, it's a possibility. Everything when you're doing investing is risky, so make sure you do your research. Connect the dots. CEI and Viking is definitely a dot where when you're looking at one company, you want to see what company the other one's linked to. So Houston, Texas just purchased majority ownership in Simpson Maxwell Crypto Mining Power Solutions. That's another link to these connecting the dots where it's worth checking out and doing your research on this. So if you buy some shares Tuesday and hold it, watch out on Tuesday morning. You never know. Make sure you buy the low so that way you can get in, because you want to hold, but then you want to hold for a reversal to the upside. So when you hold for a reversal to the upside, remember to check out the mergers. Watch for any stock splits that might be coming, things that potentially might affect your portfolio. Resistance is 0.852 and to about 0.95, and then I think they may break out. So the fear of missing out. Don't just jump into a stock because you're got the fear of missing out. But if you jump in at the right time, you could be rewarded 4 to 5 times. So I would kind of label this as bullish. Selling CEI at 0.80 instead of holding when they could possibly go over $3 is like selling BNGO. If you don't know about BNGO, that's another stock you can check into. I might do a video on them later, but for right now, at least I'm putting some information out there about that. With BNGO, they're at 586. They've kind of done the same thing where coming out of 2020, they had a nice rise up. They've fallen back down, but they've brought their main line up. So if they do it again, you could see them go up, and then maybe they'll fall back down. Maybe you need to hold through 2021 again until they do it again in 2022, and then do it again in 2023, and so on. So if you got on this train with BNGO back in 2020, and then you sold off in 2021, maybe you held it, so now you're waiting to see what else comes out of it. This variant is striking hard, so knowing when to strike hard and when to pull back. Things could get rough for a while, especially with the stimulus, with the government, with fundings. So make sure you're doing your research with storms, where things are hitting at, potential hazards that could cause setbacks with these companies, construction efforts. It's being an experienced trader. So when you're looking at experienced traders, is checking all these forms, going through and looking at how much stock is held by insiders. It's that next level of trading. So no matter if you did good or you did bad in 2021, 2022 is a new year, and 2022 could definitely show you some new gains, some new highs, some new lows. Check out what's going pink current. Stay up on what is pink. Stay up on what pink is, what pink limited is. Make sure you're doing your research with these companies as new investors, if you're a new investor, and let yourself level up and gain the knowledge so you can become an experienced investor. It's all about the long plays sometimes. I know everybody wants the short, quick money, but the longs definitely pay off. So can it be? On a lot of these, you're investing in yourself. It's outside your 401k. It's outside everything else. When you're investing and doing this yourself, you need to make sure you can trade on the platforms you're trading on and trade the stocks you want on the platforms you're investing in. It can be painful if you don't do your research. But it's only painful and it's only on yourself. So you have to have your self-knowledge to gain. And the more you gain, the less painful it is. So that wisdom goes a long way in your own knowledge and education on these stocks. And it's all about entry point. Your entry point is a determining factor on many things. If you have the fear of missing out and you enter at the peak of where it's peaking at, knowing that there may be a dip coming, but you didn't do your research to know that they're at their peak, so now you invested out of fear of missing out. Now you have to ride that stock for a long time or take the loss and get out.